The Trump and Harris presidency could be a massive difference to your retirement. I'm going to break down what they're proposing, what will probably happen, but there's some breaking news that came out yesterday, which can impact a lot of retirees. Also, which policies can help and protect your savings, the differences between Social Security, retirement income, and also with estate planning, because there is some big estate planning changes that have been made. In my view, because you need to know what I actually think about this, because I'm an enrolled agent by the IRS. That's the highest credentials the IRS gives on taxes, so I do know a lot about how tax laws change. So let me go through the breaking news first, because you'll see what I was talking about in another video is coming to pass. And that is Trump came out yesterday and flirted with the idea of getting rid of the income tax. Now, this is not the first time that people have discussed getting rid of the income tax, but he was talking about going back to the old way of the United States, where there was no income tax and we made all of the money that we needed from our country through tariffs. As a matter of fact, if you watch the old Jimmy Stewart movie, You Can't Take It With You When You Go, there's actually one of the central themes of that movie, outside the love story, about the potential future father-in-law that owes taxes. And he said, well, there was no tax owed then, because the need for income tax is actually relatively new as far as the country's history is concerned. But let's talk about what is going to be more practical. I don't think that's going to be very practical or that's going to happen. He's just flirting with the idea. But again, if these things happen, what could happen to Roth IRAs or Roth conversions? Well, you could be in a little bit of trouble. But let's talk about what's at stake for retirees. Well, there's the expiring Tax Cut and Jobs Act that started in 2017 that's going away. Now, there's also some burdens that's going to increase to your taxes, because your standard deduction is probably going to be dropped by half under the Harris plan. Now, even if Trump gets elected and he wants to extend that, the Congress and Senate still have to allow it. It's not as if it's just going to instantly go through because he wants it. And of course, there's changes to Social Security taxation based on who gets elected. So there's also the changing to the tax brackets. 2025 will be the last year, unless Trump gets elected and he gets Senate and House approval from what he's proposing to continue the lower tax rates. So that's Trump's plan, is to keep the taxes where they are right now. Like I said, he's even flirting getting rid of the income tax. Now, the Harris plan just plans on going back to the old tax plan, which is the higher rates, especially on capital gains, because capital gains were significantly lower. They actually, for the first $89,000 when you're married and the first $44,000 and change when you're single, basically are tax-free if you have no other income coming in. Harris wants to get rid of a lot of those lower capital gains and then bring them back to what they were before the changes to the tax code. Also, standard deductions. There is some changes to making the deductions and the filing simpler. Now, they've been saying this for years. Every single politician talks about simplifying the filing. I think it's a good thing. I think it can only help. I don't think it's actually going to happen. That's just my own belief. But the Harris plan believes in lowering the standard deduction and again, increasing the tax revenue. Whereas again, Trump wants to keep the same higher standard deduction. Now, this is a big impact for you, because if you've been relying on that standard deduction and having those lower taxes, I mean, it's going to be by half. So that's going to be a big difference to the amount of money in paying taxes that you probably need to start preparing for if she wins. And again, this is not a political video. I'm not telling you who to vote for. I'm just telling you what's going to happen and what their proposals are. This is a non-political channel. So let's talk about the estate tax changes. So the current exemption on the estate right now is $28 million for couples, $14 million if you're single, right? That's probably going to revert back to, under Harris, where it used to be as far as a proportion to inflation. So she's probably going to cut that in half, from 28 million to about 14 million. So if she wins, or she wins, let's say, the election, you need to start preparing, especially if you're a high net worth individual and you're going to go over the gift tax from what you're going to give to everybody, maybe some ways to explore how to use maybe some life insurance to cover taxes. A lot of wealthy use life insurance techniques to cover their taxes. Like Jerry Jones did that for the Cowboys. A lot of very wealthy people use life insurance to cover the taxes for future bills. You might want to think about what you can gift before she comes into office. There's ways you can do that. That's done with an estate attorney, not with me. I'm a tax professional. So also, you have to understand how this is going to impact your legacy, how you're going to give. So you need to plan accordingly, and you need to talk to a very competent tax professional. Now, there are some things you can do that are, from a tax perspective, helping you with this. For example, if you have certain assets, and I didn't put this in the slides, but just to help you, there are certain things you can do with your assets, especially things that have already been taxed, anything in a brokerage, any kinds of real estate, businesses, things of that nature. You can use what's called a charitable remainder trust. That's a bit complicated to explain in the video, but you can use those things, and that will also help you with your taxes. Now, the SALT deduction, this is for high net worth individuals that use itemization. Now, SALT isn't salted because there's really a D at the end, but it stands for the state and local tax deduction. And what that means is that the Harris plan is going to attempt to remove the cap on SALT. Trump wants to keep the cap. So basically, you could actually keep using your SALT deduction as much as you possibly can under Trump's. That won't be true under Harris. So again, this is just for planning purposes on what's going to be best for you in the future. Now, Social Security taxation. Trump came out with a plan to drop all taxes on your Social Security income moving forward. That could be massive for many of you because the provisional tax rate for Social Security is highly confusing. Super confusing. Like, am I being taxed on 50% or is it 50% tax? You're only being taxed on 50% at a certain bracket up to 85%. But that's what you're being taxed. That's the tax on the income. And it does act like an additional tax. And there are tax spikes in the first $100,000 in Social Security, which is hyper confusing. And if you're in the lower income brackets and you're going to be the first $100,000, where your income lands can make a massive impact to you, especially because those tax hikes can be as high as 40.7%. And if Harris gets elected, those spikes can be as high as 46%. So again, if you're relying on income and you're under $100,000, that makes a big difference. Now, Trump's proposing a living tax on Social Security. Do I think he's going to pull that off? I think that'd be very, very difficult. That's just my own opinion, of course. There's no proposals for what Harris wants to do in regards to that. So if you're relying on Social Security income, that could be a benefit if Trump can get that through. But my guess is that it would be very difficult. Again, that's just from experience looking at tax code. So capital gains and investment income. Now, this is highly applicable, right? So right now, the highest capital gains is at 20%. Well, it's going to go back to 28% under Harris. That's what she's proposing, go back to a capital gains of 28%. Trump wants to keep the same thing with the 3 tiers of 0, 15, and 20%, depending on how many capital gains that you have. So if you're relying on investment income, this can actually have a big impact because, again, you have to plan differently based on your taxes. Now, let's talk about RMDs. They're a big deal because when they happen, they can trigger a lot of other taxes, especially if you're not planning. Especially for high net worth individuals, they can trigger IRMA taxes. It just goes on and on. So your RMDs, this is big for people that have traditional IRAs and 401ks, anything that hasn't been taxed, or what's called qualified money. So the higher tax rates are going to impact you because when you look at how much money you were intending to get from your income, you're going to get less because when Harris comes in, if she wins, you're going to get less money. That's one thing to consider, especially if your income, again, is in the first $100,000. Now, Trump's approach is to keep your income taxes at the same rates. I said lower, the same rate as it is today. So it's going to be a lower rate than Harris's. Again, that's just going to be based on what's going to happen. Now, when it comes to child tax credit, Harris proposes increasing. So she plans on giving a higher amount of money to families that have children. So she plans on increasing the child tax credit. Now, this is going to have very little effect on you, but this could affect anyone who you're supporting. So if they have children, they're going to get a higher tax credit, which helps the family having the children, but that could also maybe lower your burden, especially if you're supporting your children or your grandchildren. Now, there is the first-time home buyer policy. Now, I know for many of you in retirement, you're not looking at buying a first home. But because Harris is offering the down payment assistance of $25,000, while that doesn't benefit you directly, how it may benefit you or change the way you look at it is that $25,000 is not money out of thin air. It is real money. It has to go somewhere. So what does that mean? It means that when people get $25,000, as a matter of fact, I was explaining this to my son going for a drive last night. It was just a weird conversation, right? He's 14 years old. Anyways, If you decide to give every first-time homeowner $25,000, it may be great seemingly for the first batch of people to pay $25,000 or get $25,000 in theory to buy a house. I didn't say in reality, in theory. But all you're doing is driving up the cost of houses. The cash for clunkers, it just drove up the cost of used cars. Used cars now are significantly more expensive than they used to be. You just can't do things in a vacuum economically. Things always have an impact. So if this happens and there is the first-time homeowners, it will probably increase the price of housing. Housing prices have gone up significantly, and this will actually raise the amount of money that your house is worth. So if you ever want to get a reverse mortgage, it could be helpful. Let's talk about inflation and retirement savings. So there is some changes that Harris wants to have on inflation that I don't think at all will help with inflation. The Inflation Reduction Act actually has increased spending and actually has increased inflation. Now, has inflation gone down 50%? According to the government numbers, but bear in mind those numbers of how they decrease inflation are very skewed. I mean, incredibly skewed. I really believe at this point, no matter who's elected, inflation will continue to be a problem. Now, I think with Trump's plan, inflation will come down, but it's still not going to be back to where it was, let's say, 10 years ago. We're in a new reality where interest now on our debt is now over $1 trillion. I hate it's even saying it's freaky. $1 trillion a year. I almost said 1 billion. I'm like, 1 billion is nothing for the debt. We now have enough interest that it's causing $1 trillion a year. So higher inflation erodes your savings. So that's something to be careful of. So if Trump wins, more than likely inflation will come down more than Harris. Harris is saying that she's going to bring down inflation, but literally almost all of her policies will increase inflation because over the last few years, inflation has gone up. Now, some of those rates of inflation is some of Trump's fault. You can't just throw so much stimulus money around, especially during bad years of COVID, where it wouldn't have a ramification in Biden's presidency. So this means that both parties are at fault. I'm not trying to say one party's bad, one party's good. They both are affecting inflation. We just can't keep throwing money around. It affects who the most? You, the people that are relying on a stable income, or they're relying on no new income. You're looking at retiring. You don't want to keep working. So it's affecting you the most. So basically, the more spending, the more inflation. It's really just that simple. Now let's talk about Roth IRAs and real estate investment policies. Both plans support Roth IRAs and real estate investments. Okay. Tax-free growth in IRAs remain untouched. Pretty much, yep. And real estate investment benefits continue. So nothing's going to pretty much change under the Roth IRAs. Now, again, let's say, for example, something radical happens in the taxes. Trump's already said flirting with getting rid of the income tax. That would have a massive impact on you because if you got a Roth and you put all that money into a Roth IRA and he decides to get rid of the income tax, let's say he decides to get rid of the income tax and go to a VAT, right? A value added tax, which adds like a national sales tax on all of your purchases. Well, being that's the case, it may do damage to a Roth. And this is being floated, by the way. I don't know if it's ever going to go through. It's one of those things where if it does go through, it would almost be like a short-term fix, which would only be compounded as a problem later. I think of all the countries that went to VATs, especially in Europe, their idea was to simplify the tax base, create a national sales tax, but all they did was add an income tax later. So this way you have an income tax and a VAT. Now let's talk about the role of corporate taxes. Now, I know a lot of you don't have businesses. I'm going to go kind of quick on this. So Trump plans on keeping the 20% rate on corporate taxation. Harris wants to bring it to 28%. Now, where this will affect you is that money today is more flexible than ever. The old days of money taking moves slower. You have to walk into a small town and then go to an electronics store and buy a copier. Most people buy things on Walmart or Amazon. Now, how does this affect you? It means that money is more flexible. It's movable, right? It's moving a lot faster. If the corporate tax rate goes higher, you'll see less investment in the United States and more into other countries. That's why all the major tech firms have a headquarters in Dublin because they use the tax rate called the double Irish sandwich to avoid taxes. So what this means to you is that any of your investment portfolios, it means it could probably help the larger tech firms or bigger corporations that can shift their money offshore and they're more flexible companies. But the companies that are more tied to the United States will actually probably face increased threats to their profits. This is something to be made aware of. Now, let's talk about some closing thoughts for you. Now, should these policies affect your Social Security? I think they definitely will. No matter who's elected, there'll be definitely changes to your Social Security, your RMDs, and also with inflation. So each of them have pros and cons, and you have to figure out what's actually important to you, because I don't know what's important to you, but I know that these things will have a massive impact on your retirement, and you need a plan, because whoever gets elected, especially if Harris gets elected, you need to start planning your estate planning as fast as possible for higher net worth individuals, because if those rates come way down, you need to start planning for that. Other than that, there's not too much you could do except for pretty much watch the world go as it is. If you do have some assets and you're afraid of capital gains, it may be a good idea for you to start thinking about selling some stuff. Now, of course, if you have heirs you plan on giving it to, there's a step up in basis, and therefore there's no taxes if you plan on giving it to your heirs. But in the case of looking at it from a holistic perspective, if you're looking at possibly getting money out, it could be a good time to arbitrage some of that money into other ways to use the lower tax brackets now, because things are going up. Now, that does not apply to income taxes, because these things do apply. Your income tax, the lower income tax, will go through all of 2025. So this is my update to you on what's going to happen with Trump and Harris. Comment down below on what's important to you, and I have more videos for you to watch.